Hi, this is Anthony again. First of all, the information contained in this video is not investment advice, but solely offered as entertainment. I'm not a registered investment professional of any type, simply someone you found on the internet who has made a YouTube video about stocks. Let me say a few things about the stock market before I talk about the subject of this video, which is about why I sold off all of my Lucid Motors holdings. I believe that long-term investing in the stock market is a prudent investment strategy for most people who have access to it in the industrialized modern world. And by long-term, I mean starting investing as young as you're able to and putting in money over a long period of time and keeping your hands off of it, ideally until you are retired. And I'm well aware that this can be difficult for many people for many different legitimate reasons. And when we talk about investing in the stock market, there are some things that are very easy and some things that are very difficult. What is difficult about it? The first difficult step is to actually do it, actually opening up a brokerage account and putting money into it. Though it is psychologically difficult, it is also relatively easy. What is easy about it? With the internet, my understanding is that you can open up and fund a brokerage account probably within about 15 minutes. My accounts were set up years ago in a local brokerage office, face to face with a person and filling out paper forms. But I think that most brokerages can now allow you to open up and fund your account online. Certainly, once you have your account up and running and funded, buying and selling is just a few clicks away. Another difficult thing is to figure out which stock or stocks to buy, and often by the time we have finally gotten up the courage to open up the account and find the money to fund it and start buying stocks, we are well into the end of a bull market, which means a market where the prices in general have been going up for a number of years. As we end 2021, the overall bull market in the United States has been running since 2009. So that's been a good 11 and a half or more years, and I'm going to ignore the short dip in 2020 when COVID first hit. Does that mean that we're at the end of a bull market? No one really is good at exactly timing the end or start of markets, but many indicators would point to a market correction at some point in the relatively near future. Not just historic modern statistics, but also other factors that are not directly related to the stock market, but highly correlated at this point. And I include what I consider to be the NFT bubble and the cryptocurrency bubble that we are currently experiencing. That being said, I am always long-term optimistic about the stock market. I believe that the economy of the United States and the world in general will continue to increase in the future, which is represented by companies traded on the stock exchanges throughout the world. I believe that most stock market investors, and especially new investors with little knowledge, should invest in low-cost index funds. Very simply, these are funds that can be traded like stocks that hold 30 to perhaps thousands of companies that are meant to mirror an index such as the Dow Jones 30 Industrials or the Russell 2000 index of small cap stocks. These should go up when the economy is doing well and down when the economy is experiencing difficulties, but not subject to individual news items from one company or another. Investors in Tesla know what I mean here. But for investors who like a little bit more risk and who want to spend more time researching stocks, the potential for higher gains than what index funds can provide can be enticing. Going back to the theme of difficulty in investing in stocks, another major difficulty is finding a stock that you want that then does not immediately crater the moment you buy it. And this seems always to happen. That's why I believe long-term investing is the best strategy, because if you buy a good company with good prospects, then over time, if you hold on to it, you should make money. But what if you're lucky and you buy a stock and eventually you're making money in it? That's good news, but it leads us to another difficult question. When do you sell? Now, I live in the United States and I have two types of stock accounts. One is just a regular account, and that means that if I have gains in it and I sell a stock, I will have to pay federal tax on it. I also live in a state that has an income tax, so I would likely have to pay state tax on my gain also. Now, taxes like these can depend on your income level and the length of time that you have held the stock. I won't go into that here. If I have losses on other stocks, then I can reduce my taxes by selling losers in the same year as selling winners. But again, I'm not going to go into the minutia of tax rates and how gains and losses are calculated here, but it's something to consider. My second account is my self-directed retirement account. In the United States, it's called a Roth Individual Retirement Account, or Roth IRA. The great thing about these accounts is that you put after-tax money in them, and then all of the profits are tax-free if you hold your original contribution in for a certain period of time and you do reach a certain age. I believe that there are also certain circumstances that you can take money out without penalty, such as using the money for buying a house, etc. Again, I'm not giving tax or investment advice here. Do your own research and consult with professionals. But the reason that I bring up the Roth IRA is that it's the one that I have most of my money in. And when I make a profit on selling a stock that has gone up, I don't have to file any tax documents or pay any taxes on it. The downside is if I lose money, I don't get to write off the loss against other gains or income. So keep that in mind. So the other day I made a difficult decision. The last few days of the market has been somewhat of a pullback, but still is pretty close to all-time highs. One of the stocks that I invested in early 2021 during the froth of the SPAC boom was Churchill Capital 4. The ticker symbol was CCIV. A SPAC is a special purpose acquisition company, and I won't go into that in this video, although you should at some point learn what they are, and there is an unlimited amount of information on the internet about SPACs. CCIV eventually became Lucid Motors, and the ticker symbol changed to LCID. Lucid Motors is what is called an EV company, EV standing for electric vehicle. 2021 has been a great year for some, but not all EV companies. The Chinese EV companies listed on stock exchanges in the United States, in particular NIO, Xpeng, and Li, have had a great run for a while, and I currently own shares in all three, although I would not recommend investing in any of them at this time. The reason for that is that they have declined in value, in part due to regulatory issues with the Chinese government. I believe that there is a good chance that the Chinese government may require those companies to delist from American exchanges and relist, possibly in Hong Kong. There are also some American regulations that may impact their continued listing on American exchanges in the future. Therefore, with those dark clouds hanging over these Chinese companies, I would avoid them at this time. As for American EV makers, Tesla has done quite well, although it has been a rocky road along the way. And of course, Lucid has done very well. In my case, I bought my CCIV shares at $18.19 in January 2021. In July, those shares went from being CCIV to LCID. On December 10th, I sold my shares at $37.29, which you can see is slightly over 100% total return in less than 1 year. Again, because this is in a Roth IRA, there are no taxes due on those gains, and there's no commissions to buy or sell either. So why did I sell? I think that Lucid Motors is a company that has the potential for long-term success, which should result in a long-term increase in their stock price. But the price of the shares is down from a closing high of $55.06 on November 29th to $37.66 on December 10th, 2021. That is a drop of $17.40 a share. What's caused that drop? Often at the end of the year, investors take profits, especially if they want to offset losses on other stocks. Lucid has done very well even at these lower prices for the year, and so it's reasonable to assume that some holders of the stock are selling for those reasons. Also, as I pointed out before, the stock market is likely somewhere near the end of a bull market, and people want to lock in some profits now. This is mainly my motivation in selling. That being said, I have plenty of other companies in my portfolio that I have no interest in selling anytime soon. So I'm not selling everything because I think that the end of the market is near. But two other factors that are specific to this company have happened recently, which analysts agree is affecting the price of the stock. One, the company has been served with a subpoena by the U.S. Securities and Exchange Commission and is being investigated for certain projections and statements it made when it merged its operations with Churchill Capital in July. This may or may not turn out to be of much relevance over the long term, but doesn't look good and could result in financial penalties for the company. The second factor weighing on the market is they are issuing a convertible senior note with a $1.75 billion face value. These notes bear a 1.25% interest rate and are due in 2026. The convertible senior notes have a conversion price of about $54.78 per share. Basically, what this means is they are issuing bonds, which could indicate that they need further money to continue operations. These two factors should not impact the long-term success of the company, but the company is still one that is losing money, and I think that taking some or all of your profits in this particular stock at this time could be a prudent course of action for the investor after a 100% rise in the stock price. But I also think that potential investors should keep an eye on the company and its financials and consider buying shares in the future, hopefully at a lower price, as a long-term investment in what seems to be an ever-growing segment of the economy, that is the electric vehicle market. Those are just my thoughts on this particular company as it relates to my former holdings in it. The internet is full of all kinds of good information as well as bad information, and there are probably a lot of people that you could find on YouTube hyping the stock. In the long term, they might not be incorrect, and I think that long-term investing is the best course. But you also need to take your winners from time to time just to lock in profits. And there's nothing wrong with selling part of your holdings in a particular company that has, say, doubled, and using your profits to put into something else while keeping some of the remaining shares in the original company. Personally, I used the money from my sale of Lucid and bought more shares of NVIDIA, which has been perhaps my best long-term investment ever. Again, this is Anthony Mills. If you like this type of content and want to see more, it would really help me if you subscribe to my YouTube channel. Also, please view all of my videos, and if you like them, click the like button. It also helps out if you leave a comment in the comment section for each one. I'm on Instagram at Anthony RR Mills. You could follow me there. I love investing in the stock market, but I also sell financial collectibles on eBay. These include old stock and bond certificates, some of which I've displayed in this video. These are items that are no longer traded on the stock market, but which have historic value to collectors. I do not ship items overseas, but if you live in the United States or have a postal address in the US that you can receive items at and are interested in buying items from me via eBay, my username there is stock_tycoon. Or if you want to buy directly from me, you can contact me on Instagram. Thank you very much, and good luck in creating multiple streams of income to increase your financial security.